And I think there's going to be continued economic uncertainty into 2020, and what we're going to see as a result of that is a number of fraud and corruption risks increasing. Firstly, management and employee fraud is likely to increase. In hard times, there's always a potential for management and for employees to be looking for other ways of extracting value from the company and making more money than they've made previously. So there might be employee expense fraud, there might be setting up of outside suppliers, third-party suppliers, where they can extract value from the company that way as well. So there's going to be those type of frauds that take place. There's also going to be pressure on the financial results of the company as well. So there'll be pressure from stakeholders to report better results, pressure internally to report better results, to get higher bonuses, etc. And there's going to be therefore pressure on manipulating the financial statements to present those results, either to get the higher bonuses, either to maintain stock price, or either to avoid breaching bank covenants, which would trigger a run on the company and financial distress. There's also going to be opportunities for bribery and corruption as well. Again, if there's a smaller market than there was previously, it's going to be more competitive, and people are going to be looking at ways to distinguish themselves from the competition, and that may be by paying bribes to win business. And all this is going to be coupled with a backdrop of people spending less money on corporate governance and compliance, so there's going to be more opportunity to have these types of issues as well. What we do when we're using data analytics is that we're looking to obtain an extract, first of all the accounting data that relates to the particular company we're looking at. So by accounting data, I'm talking about the general ledger, which is the core accounting ledger of the organisation, and then accounts receivable, which is touching on every customer transaction, accounts payable, touching on every supplier transaction, payroll, touching on every payment to an employee for their salary, and employee expenses, so touching on every claim that an employee is making for expense purposes. So we're capturing all that data together in one repository, one central repository. What we're then wanting to do is understand which are the riskiest third-party relationships the company has. So who are the riskiest suppliers, who are the riskiest customers they have, and who are their riskiest internal employees, who are they? And then what are the riskiest transactions with all those parties? So that's the objective when we're obtaining all this data. That's what we're trying to find out. And to do that from a manual perspective, by us reviewing manually line by line every item of an accounting ledger, would take months or years, and we still may not identify the highest risk transaction or entity. So what we're trying to do with data analytics, once we've got all this data into a central repository, the forensic accountant, so somebody like me, will work with our data analytics specialists to come up with a series of tests that we're going to run across the accounting data to identify the highest risk supplier, customer, employee, and transactions. And those tests may be something like, I'm going to look for all transactions that are a payment to an offshore bank account. So they're a bank account in a location that's unusual in some way. It's not in the home country, it's not in a country that's they've got group companies in, it's some offshore location, maybe for tax purposes or for concealing the ownership of that bank account. So that would be a risk we would identify in the data. We may also be looking for duplicate invoices and payments that are made on the same date. So that would be a risk that the same legitimate documentation is used then for a fraudulent transaction. So they've used it to obtain approvals, and we see an amount being paid on the same date, the same amount, but it's going to a different third party. Something else worth mentioning in terms of the data analytics side as well is that by using these methodologies internally, either for investigations or for compliance reviews, they're methodologies that are understood by regulators and law enforcement agencies, and they understand why companies use these and how they use these, because when a regulator or law enforcement agency is conducting an investigation, they want to be satisfied that the company has done everything it can to identify the issue that's been alleged. Now, by sample testing alone, based just on manual selection or random sample selection, that's not scientific enough to be able to do a finite review of a limited number of transactions. to convince the regulator that you've done enough to find that issue. Whereas using data analytics, you are electronically looking at every single transaction. So you are, having some focus on every individual transaction, every individual supplier, customer, employee. So it means you can convince the regulator and law enforcement agency that you've done sufficient amount of work to try and identify this issue by focusing on the highest risk transactions and then looking at those in detail with the supporting documentation. So it's very important for validating a methodology that you've used either for your investigation or your compliance review. Our work and our involvement in these projects will be twofold. It will be firstly to investigate, to identify the facts of the particular allegation that's been alleged. And we'll be working very closely with lawyers to present those facts to the lawyers for them to determine whether there's been a breach of regulations or legislation in that situation. But at the same time, or very closely afterwards, we're going to be helping the company identify how they came to be in the position where that investigation was necessary. What had they done wrong? Where were the weaknesses in controls and policies that allowed that to happen? And how can they stop that going forward?